Right. Rajesh Kothari is here with us. Rajesh, first let me get your thoughts on the overall market, which is cheering the commentary from Moderna. But in general, there is a lot of skepticism as far as the street goes, because they're saying that the reality and the market rally are not gelling. They are not making sense. What are you making of it?
I think, if you look at last 5 years, last 10 years, last 20 years, not only in the Indian market, but also in the global market, economy and markets at times, they do not go together. And particularly in India, every investor is worried that, while the underlying economy is still very sluggish, why the markets are moving up. But I think they are missing one important point, that the economic power of top 200 companies, it is going up significantly. And that actually, the trend started from demonetization, then GST, and then IL&FS crisis, and then the COVID crisis. The large player with a strong balance sheet is going to become larger. The consolidation is accelerating at a pace which is unprecedented. And I think post-COVID, the survival of the fittest will be the big companies with clean balance sheets. And it is because of that markets are moving up, because market is made up of those top 200, 300, 400 companies, and not the SME segment which is unlisted, not the stress on the farming community which is unlisted. So I think, the top 200 companies, economic power, the earning power, the profit pool opportunity is going to gain further momentum. Let me give you a few examples. Say, for example, airline industry. How many players will survive this downturn? Maybe only 1 or 2 players. If you look at the hotel industry, if you look at the NBFC sector, if you look at the private sector banks, so everybody knows about the PSU banks, but within private sector banks also, many banks may not able to grow from here at 18, 20, 30%. So in every sector, in pipe industry, I was talking with few large companies within the pipe industry, and there is a huge consolidation which is happening, and 3-4 companies are exiting the sector. So I think it is this thing which is very, very important from investors' perspective, which they need to focus on. And the power of these 200 companies is going to go up further from here. And therefore, I think market is all about those 200 companies.
Sure. Rajesh, we are having this chat on a very interesting day. A company which is equal to 200 companies is having their AGM. Reliance Industries is getting bigger with each passing AGM, and we usually connect around the AGMs to chat the notes and exchange notes. This time, of course, it's an unprecedented time on the back of deals. What are your thoughts here? They are also kind of cementing their position, transforming from a commodity to a technology company, and these biggies must be seeing something, that they are pouring money at 5 lakh crore valuation in platforms with future potential.
You are absolutely right. I think the Reliance new journey has started when they moved from East Coast investors to West Coast side of the investors, because the mentality of these two investors are completely different. On the eastern side, of US, the mentality is gross block, price to book, return on net worth, and so on and so forth. But mentality on the West Coast side is completely different. They look at size of opportunity and your execution capability to get to that scale. Reliance being one of the largest player with a dominant market share in the telecom sector and has a strong platform, I think that's what the West Coast investors are looking in Reliance. Size, of course, is huge, scale is huge, and the company has execution capabilities to further gain market share. And not only to gain market share in the existing categories, but to further expand the product offerings and service offerings. And it is that which is attracting the global investors. And surely because of that, I think the company will continue probably to maintain, this kind of what I would say, the new growth trajectory, for the company. And that is doesn't necessarily mean that return on net worth will improve. It may or may not, because the psyche of this kind of investor is to keep spending but build the revenue over next 3, 4, 5, 10 years. And in the 10th year, you become like Amazon and Googles of the world. And I think that's what opportunity in Reliance is all about.
Rajesh, another opportunity which we have been discussing for almost 6 months now, but now it is only gathering steam, is the entire chemical and API space. Early it was just about China pollution trigger, then that got wind in the sails was US-China, a diversification of American companies, their sourcing from China towards India, and now COVID has come through. And now the government is actually taking initiative and kind of nudging Indian companies to expand a lot. Talk to us about this chemical and API kind of pharma play, and are you playing it in your portfolio? Or tell us about that as well.
Yeah, Ajay, if you remember, from last so many years, we've been interacting with you, and if you look at our portfolios and our several discussions in last few years, we have been probably the early entrant into the specialty chemical space. And I think this space will continue to gain momentum. The size is going to be of different size compared to what we have seen 3 years back. And it is not because of India versus China, but it is because of Indian companies have a very strong domain, the competence in the chemistry domain, and that's very, very important. In last 3-4 years, these chemical companies, and I'm talking about our companies which we are holding in our portfolio, and please put a disclaimer, like companies like Navin Fluorine, companies like SRF, companies like PI, these companies, they have done so much work in last 2, 3, 4 years, significant capital expenditure. They have already proved themselves to the global customers. And as the confidence of the global customer has further accelerated, the China plus one is only that accelerator. And therefore, they are gaining the new orders, huge order wins, and probably their ability to do this capital expenditure and make sure that execute that capital expenditure is something which is very, very strong. And that is the reason why we believe that this specialty chemical story probably is just a beginning. I think over next 3, 4, 5, 10 years, can the specialty chemical industry be equivalent to like pharma industry of today? Answer is yes. There is an opportunity, and there are players who have demonstrated their capabilities to execute to this scale. Coming to API side of story, you are absolutely right. I think with COVID coming in, that's one of the major trigger for Indian API segment. And again here, Indian companies have a proven track record in terms of competence and in terms of the execution capabilities. There are only few limited number of companies which can do this in India, and therefore entire market is focusing on that 3, 4, 5, 6 companies which have the capabilities to deliver this. So yes, even we believe that opportunity is going to be large even for API companies like specialty chemical space.
Finally, Rajesh, talk to us. What are the risks you are actually seeing at the horizon, which investors should be cognizant of?
I think the biggest risk, Ajay, if you ask me, is one, of course, which is well talked about in terms of the delay in economic recovery because of COVID-19 spread and lockdowns and so on and so forth. But I think the bigger risk to my mind is US elections. Because there is a talk about the plan about increasing tax rate, income tax rate, and if that happens, then there is a straight downgrade in corporate earnings EPS of about 15 to 18%. And of course, I don't think that's a good news if it happens. So I think the biggest risk, if you ask me, for global market and also for India market, because India is linked to global, is about the tax rate hike. If it happens in US election. So this is the probably one of the major risks. Nothing much you can do about it, and it basically impacts a little bit on short term, no major change in your long-term views. But yes, if you ask me, the trigger for correction after such a significant rally in last 1.5 to 2 months, that can be good reason for market to correct.